Okay, good evening to all of you. Yeah, today what we are going to do is we'll be covering international banking and also the risk management Basel guidelines. What we are trying to do is that in the 1 hour time allotted to me, I try to quickly go through those areas which are very much important for all of us. Okay. Yeah. Thanks everyone for your wishes. Let us start the session. Okay. So I have the session up to 8:30. So I'll cover both international banking and also the Basel guidelines, important guidelines, especially with reference to the examination point of view. Otherwise, international banking itself is a lengthy subject. I'll slim it down. Okay. Let me start. International banking, when we are speaking, we always have to remember one thing. We talk about the foreign exchange transactions. Foreign exchange transactions, we bifurcate into inflows and outflows. Inflows means the foreign currency will be coming into the country. And when the foreign currency comes into the country, we are exchanging them to Indian rupees. So that's what we call is a foreign exchange. Exchanging foreign currency into Indian rupees is a foreign exchange transaction. When it happens as an inflow, the foreign exchange will be coming to the country. The foreign exchange will be with the customer. So bank will be buying the foreign currency from the customer. So in all inflow transactions, what really happens from the bank's point of view is that the bank is buying foreign currency from the customer. So we also that whenever a customer says, I received $10,000, please give me rupees. What the bank does actually is they buy the foreign exchange from the customer by giving a buying rate and exchange them into Indian rupees. So in other words, in all inflow transactions, we are applying buying rates for the customer transactions. In outflow transactions, Indian rupees are being converted or exchanged into foreign currency and remitted outside the country. So when outflow transaction is taking place, we are selling foreign currency to the customer. So all outflows are selling transactions. So inflows are the buying transactions, outflows are the selling transactions. We have in inflow selling transactions, TT selling, BC selling. In outflow transactions also we have TT buying, BC buying. Okay, in inflows, TT buying, BC buying. In outflows, TT selling, BC selling. So some of these things we touch upon in the 2 slides. So the inflows again or outflows again, this is all foreign exchange is all about that. All these transactions are controlled by one act called FEMA, Foreign Exchange Act, passed by the government of India in 1999, effective from 1/6. It has 49 sections. Especially those are appearing from 122, 223. These are very important things. What is a FEMA, when it was effective from, and how many sections it has. Maybe 4 to 5, 3 to 4, this may not be much relevant from the examination point of view. Under these sections also, there are 5-6 sections which are important for us. One is section 4, one is section 5, section 6, section 7, section 10, section 46, section 47. These are the 6 sections which are very important for our point of discussion. Section 5 defines current account transactions. Section 6 defines capital account transactions. Section 7 speaks about the export of goods and services. Section 10, authorized persons. Section 46, central bank, central government. Section 47, RBA. Now let us discuss a little more. When I showed in the first slide, I said all transactions we are bifurcated into inflow transactions, outflow transactions. Under FEMA, we don't say inflow and outflow transaction. We always say that this transaction is a capital account transaction or it is a current account transaction. If it is a capital account transaction, it is governed under section 6 of the FEMA. If it is a current account transaction, it is covered under section 5 of the FEMA. We will see what are those transactions. Now, are you not able to see this slide, sir? Okay. Then there is section 7, which says whenever the goods are being exported out of the country, what are the guidelines given to the authorized persons are mentioned in section number 7. In last time examination, they asked this question: which is section of the FEMA guidelines controls or governs the export of goods and services? You must be able to remember these sections and the relevant subject, not going not more deep into that, but these are very important for us. Section 10 is authorized person. Means all the foreign exchange transactions in India are conducted by authorized persons. There are 4 authorized persons. One, we call them as authorized dealer 1, dealer 2, the dealer 3, and FFMCs. All commercial banks, all commercial banks means public sector banks, private sector banks, and the foreign banks come as a authorized persons under schedule category number 1. We call them as AD category 1 banks. Category 2 are some of those RRBs and cooperative banks who have been authorized by RBI to deal in foreign exchange transactions. Authorized category 3 branch are those which are the government agencies like Exim Bank, IFSC, or maybe SIDBI. Some of these are permitted to export or import, do foreign exchange transactions for themselves. They cannot do any foreign exchange transactions for their clients. So they are treated as the authorized dealer category 3 persons or authorized person. Fourth one is called FFMCs. FFMC means full-fledged money changers. Normally, whenever you are in the airport or whenever you are in the main streets of cities, you find we are doing foreign exchange services. Their boards will be there. They are all actually called FFMCs, full-fledged money changers. Okay, these 4 put together are called authorized persons. Authorized dealer category 1, commercial banks. Authorized dealer category 2, RRBs and certain cooperative banks. Authorized 3, government agencies. The fourth one is FFMCs, full-fledged money changers who are dealing in the buying and selling of foreign currencies. This is section 10.1 we have to remember. In now, all these transactions which you have seen, inflows and outflows, okay, this slide, inflows and outflows, we further bifurcate them into current account transactions and capital account transactions. Briefly, we can say the first 2 transactions, resident inward remittances, export receipts, resident outward remittances, import payments are considered as a current account transactions. Resident inward remittances, export receipts, resident outward remittances, then import payments. These 4 are treated as a current account transactions. We will elaborately see these current account transactions once again. All other transactions, deposits, borrowing, FDI, FPI on the inflow side, then opening deposit accounts, lending, ODI, OPA, all these come as the capital account transactions. So all these capital account transactions and the current account transactions, who is controlling? All the FEMA guidelines give empowerment to Government of India to give rules with reference to current account transactions, meaning thereby any current account rules introduced in our country, the guidelines are given to us by Central Government of India. With reference to capital account transactions, the regulations are given by Reserve Bank of India. So 46 empowers the central government to give rules with reference to current account transactions. The examination question will be like this: under what section of the FEMA the central government is empowered to do current account transactions? Section 46. The capital account transactions are regulated by Reserve Bank of India under what section? Section number 47. Remember this. Further elaborate this. This is how the FEMA guidelines speak about that. The capital account transactions are these. They are self-explanatory, but let us see. Import or export of currency is coming under the current capital account transaction. Borrowing or lending, capital account transaction. Acquiring property. Let us suppose a person resident in India wanted to buy property in USA or in Dubai or in UK. That is treated as a capital account transaction. Or an NRI wanted to buy property in India. It is a capital account transaction. Then obtaining insurance from a foreign company, it is a capital account transaction. Issuance of a foreign guarantee is a capital account transaction. Investment in foreign securities. Investment in foreign security means, let us suppose I'm residing in India. I'm a citizen of India. I wanted to buy Apple shares. I wanted to buy IBM shares. Whenever I wanted to deal in foreign securities or shares, I can open a demat account on the foreign stock exchanges, maybe Nasdaq or whatever it is, and then I can deal in foreign securities. That is treated as a capital account transaction. Then, are you getting the audio or not, sir? Suresh Babu is complaining that audio is not coming. What about others?
It is. I think it is his issue. That maybe issue related to joining. We are getting good quality, sir. No issue.
Good. No then sale and purchase of foreign currency derivatives. Okay. Maintenance of foreign currency accounts. Let's suppose an NRI is maintaining a NRO account with us, FCNR account with us. They are all foreign currency accounts which will be treated as a capital account transaction. Investment in Indian companies, ODA, FDI investments, FPI investments, all these will be treated as a capital account transactions. Means they have categorically identified which transactions come under the capital account transactions. Now, current account transactions, we bifurcate them into three. Prohibited transactions, Schedule 1, 8 transactions are there. The Schedule 2 transactions are restricted, 9 transactions are there. Other than these 17 transactions, all other current account transactions are freely permitted by the authorized dealers. The two authorized dealer category 1. Authorized dealer category 1 is commercial banks. So ultimately, what are the Schedule 3 transactions? We will see. Okay. Now, these capital account transactions and current account transactions are dealt by authorized dealer category 1. Let us suppose we take the case of Union Bank of India. Union Bank of India is authorized dealer category 1 bank. We are having 8,500 branches. Whether 8,500 branches can deal in foreign exchange. RBI said you have to categorize all your branches into 3 categories. Category A, Category B, Category C. Category A branch is called Treasury, which is in Mumbai. Category B branches are only authorized to deal in foreign currency, foreign exchange transactions. There are 149 branches of our bank which are classified as Category B branches. These 149 branches, along with 4 NRI branches, they only deal in foreign exchange transactions for all the customers. Other than these 150 branches, all other branches of our bank, we categorize them as Category C branches. Category C branches can also do certain foreign exchange transactions, like opening NRE account and NRO account. Even though these are all rupee accounts opened by NRIs in our branches, the operational aspects of these accounts are not governed by our domestic transactions. They are governed by only FEMA guidelines. So this is how we are doing all these transactions in foreign exchange area. Okay, Category A, Category B, and Category C. Now, whenever we are doing foreign exchange transactions, we need to open certain foreign currency accounts. Okay, why we should open foreign currency account? Let us suppose some customer came to me. He wanted to remit $10,000 to his son who is in Chicago. Then he is giving me Indian rupees. Now, once he gives me Indian rupees, this Indian rupees I have to convert them into foreign exchange. Means I have to sell foreign currency to the customer, and I should remit this money to the ultimate beneficiary in Chicago. So now I received Indian rupees. I am exchanging it to foreign currency, and then I should send a remittance in foreign currency. So which account I can debit to send foreign currency? I cannot debit my rupee account in India and send foreign currency. What banks will do to enable all the foreign exchange transaction to take place, they will open current accounts. Remember this word, slowly I am telling. They open current accounts in various foreign banks in foreign currency. This account is called Nostro account. It is also called our account with you. It is always in foreign currency. These are all important aspects from examination point of view. Now, if our Union Bank of India has opened a current account with Citibank New York, which is always in foreign currency US dollars, we call that account as a nostro account. Nostro is a Greek word. We say our account with you. Okay. Now, always another remember. So now as per my customer's request, I have debited his account with equivalent of $10,000, say 8 lakhs rupees I have debited. Then I give instructions to Citibank New York to debit our nostro account with them and remit the funds finally to the beneficiary who is in Chicago. So in order to enable these transactions, we use these nostro accounts. Similarly, let us suppose one of our customers has received $10,000 to the credit of his account. Now the remitter will credit the amount to our nostro account with the Citibank New York. Then by seeing a credit in Citibank New York nostro account, we will pass on that credit to the customer's account in whatever branch it is. Okay. Now, the debit and credits are taking place in foreign currency nostro account. But we should have a corresponding debit or credit in Indian rupees in Indian accounts also. So for effecting debit or credit transactions, we use mirror accounts. Look at the last account. So for each nostro account we have, there will be one mirror account there. For example, our Union Bank is having say 25 to 30 nostro accounts in different currencies. US dollar itself, we may be having 3 to 4 nostro accounts with the different banks, maybe JP Morgan, Citibank, like that. Euro we have, then JPY we have, then GBP we have. For each nostro account, there will be a corresponding mirror account. So mirror account is always used for reconciling the nostro transactions. So this is 1, 2. Next accounts we call as vostro accounts. Like we require transactions to conduct in foreign currency, we are opening nostro accounts. Certain foreign banks also require to do transactions in rupee. So they will open rupee accounts with banks in India. And those accounts are referred as vostro accounts. Your account with us. For example, Bank of New York is opening an account with Bank of India, Mumbai. We refer that account as the vostro account. We refer that particular account as the vostro account. There is another account called Loro account. Now we are not using this account at all. Earlier, when the messages were sent through telexes only, we used to use this word. But from examination point of view, let us know this transaction. What is this Loro account? Let's suppose Union Bank of India is maintaining a nostro account with Citibank. Bank of Baroda is also maintaining a nostro account with Citibank. Now, when we remit funds to Bank of Baroda account, which is also maintained with the Citibank, we send a message. We used to send a message to Citibank in a simple format. Say, debit our account US dollars 1 million, credit Loro Bank of Baroda. The moment I use the word Loro, central bank, the Citibank will understand that Bank of Baroda is maintaining account with them and they will credit that account. For that purpose only, they used to have these Loro accounts. Now, Loro accounts are not used at all. This terminology is not used at all. We are sending all messages to Swift, so no Loro account concept at all. But examination point of view, nostro, vostro, then we have Loro, and we have the mirror accounts. Next, we should understand about the quotations. What are these quotations we call? Direct quotations, indirect quotations. Direct quotations means when the foreign currency is fixed, home currency is variable, we call it as a direct quotation. In India, we are using only direct quotations. So let's suppose a customer came to us and say, give the rate for me. I quote USD 1 as 83.20. Tomorrow or some other day comes and says, quote the rate. I say USD 1 is equal to 83.25. Meaning thereby, I am not varying the foreign currency. I am only varying the domestic currency. This type of quotes are called direct quotations. If it is the other way around, it is called indirect quotations. So in all our cases, we are only quoting direct quotes. In direct quotes, there will be one kind of maxim, means rule. Rule is that buy low, sell high. What does this buy low, sell high means? What is a buy transaction? Bank is buying foreign currency from the customer. When are we buying foreign currency from the customer? For all inflow transactions. So whenever we are buying foreign currency from the customer, in case of an inflow transaction, we should give him lesser rupees. Okay, let's suppose we should give him only 80 rupees. When an outward transaction is going on, we are selling foreign currency to the customer, so we should charge more rupees from him. We will not sell it at 80 rupees, we will sell it at 82 rupees. So the difference between a buying rate and selling rate is called exchange margin. Okay, these are all some of the examination related questions. This is called exchange margin. What is the maximum for a direct quotation? Buy low, sell high. What is a direct quotation? Foreign currency is constant, domestic currency or home currency is always variable. In case of indirect quotes, in India, what are the quotes we are using? Only direct quotations. Okay. Next, we go for indirect quotations. Indirect quotations means home currency is fixed, foreign currency is variable. Okay. What is the maximum for indirect quotation? Buy high, sell low. Okay. Remember this. These are all very good important examination questions. Direct, what is a direct quote? What is the maximum for a direct quotes? Which is variable, which is constant? All those things will be related questions in this particular slide. Now, whenever we are quoting rates to our customers, there are buying rates or only selling rates. Buying rate means the rate at which we are buying foreign currency. There are two buying rates, TT buying, BC buying. BC means bills for collection buying rate. There are two selling rates, TT selling, BC selling. TT means telegraphic transfer, BC means bills for collection. Two rates. Based on these two rates, certain banks are quoting some other rates also. Whenever they are, let's suppose, issuing traveler checks, whenever they are encashing currency, then currency rate like that they are deriving it. Basically, two rates only: buy rate, sell rate, TT buying, TT selling, TT buying, BC buying, TT selling, BC selling. Okay, these are all the different types of quotes we are having. Now, I said about the current account transactions. All current account transactions, we said we are bifurcated into three. The last type of transactions are Schedule 3 transactions, which are freely allowed by authorized dealer. What are those Schedule 3 transactions? What we are freely allowing for the various customers? Let us see this. Now, the Schedule 3 transactions are applicable only for individuals, not for the corporates or companies. Okay, private this partnership, limited these are all not for those. These are only for non-legal entities. Non-legal entities are two. One is individuals. Second is proprietorship firms. Proprietorship firm on behalf of that proprietor can also use these facilities. What are the facilities we have? We have the private visit, we have the business visit, we have the gift, we have donation, we have medical treatment, we have education, we have immigration, we have maintenance of close relatives, expenses while going abroad, for employment. All these transactions are considered as the Schedule 3 current account transactions, which can be done for individuals by the authorized dealer. Okay. Now, whenever we are doing all these transactions, now they have covered all these transactions under one scheme called LRS, Liberalized Remittances Scheme. We will see that Liberalized Remittances Scheme. Then again come back to this slide. Under Liberalized Remittances Scheme, we can remit up to $250,000 in a financial year. In this $250,000 in a financial year, we can remit either for one purpose or multiple purposes together or separately up to a maximum of $250,000. Let's suppose somebody has gone on a private visit. He had taken $1 lakh from the bank. Then after some time, he's going for a business visit. Then he can take another 1 lakh. then he's going for educational purposes. Maximum how much we can allow now for him in a financial year? 1 lakh has already gone for private visit. 1 lakh has already gone for the business visit. We can allow only 50,000 for medical treatment. So on one occasion or cumulative, we should not exceed $2,50,000. The scheme is not applicable for corporates, partnership firms, HUF, trust, etc. But whom we can do it? We can do it for proprietorship firms. Okay, remember this. Now, when remittances are sent, they can be combined for family members also. Let's suppose myself and my wife, we wanted to remit. I can remit 2,50,000. My wife can also remit 2,50,000. Put together, we can send $5 lakhs for any of those activities. Okay, this is one. Let us suppose if some family members is having minor children, on that behalf of also LRS scheme can be utilized. Let's suppose I had 2 minor children. So then total I can remit up to 1 lakh, how much that? 10 lakhs dollars under this LRS scheme. This is point one you have to remember. Whenever the remittances are going under LRS, customer has to submit one application form, and that application form is called Form A2. Okay, this is mandatory. PAN card is mandatory. These two are mandatory for remittances and LRS scheme. Today, even RBI also mandated taking PAN card in all the accounts. Otherwise, we take Form 60 and all. You must be knowing that. So now, Reserve Bank of India told banks can also obtain this Form A2 through digital platform. Means through, if somebody is having internet banking facility, he can fill up this form and send it to the bank for availing facility. But up to what amount? 25,000 only. Even if you have submitted an online application form, subsequently the branch has to take the printout of that and keep it on record. Okay, so this we all call as the liberalized remittances scheme. The customer must have an account with us. By chance, if it doesn't have an account with us, he must produce a statement from his previous bank for a period of 1 year. Okay, borrowed funds cannot be used for capital account remittances. These are important as far as the LRS transactions are concerned. So what are the LRS transactions we are doing? LRS transactions we are making for all these current account transactions. Certain capital account transactions are also be done under LRS scheme, like opening an account in foreign country, investing in investments in foreign country, acquiring property outside the country, investment in ODI. All these can also be covered under the LRS scheme. Again, I'll repeat it because there is no slide for that. I'm repeating it. Current account transactions you have seen. Now, what are the capital account transactions for which I can use LRS scheme? Remember those 4. What are these 4? For opening accounts abroad, for investment in foreign securities, now for acquiring property abroad, for investment in overseas direct investments. These 4 categories are categorized as capital account transactions. We can use this $250,000 for remittance. Recently, Reserve Bank of India has given guidelines. Even if you are remitting some of these amounts for any of the entities situated in IFSC, that gift city in Gujarat, they will also be under LRS scheme. Let's suppose certain exchanges are working in this IFSC center. Only Gujarat it is there as of now, called gift city. We are opening an account at the foreign stock exchange, which is set up in gift city. I remit money to that, means money is remitting in India only, but I can remit in foreign currency to that account, and that's also covered under LRS scheme. This is one point you remember, latest one. Some guidelines are given. Only when we are remitting funds to close relatives, we always have to understand this section 277 of Companies Act, which says that we can remit only to close relatives as defined in Companies Act 277. There are 8 relationships which are important for us. Another important concept in LRS is, as per RBI guidelines, Government of India guidelines, in fact, we have to collect tax on all LRS remittances. Look at this particular chart. This is one of the important charts. Different items are there for different portions are there, self-explanatory. Okay. LRS for education, financed by a loan. Up to 7 lakhs, no tax is collected at source. It is not TDS. It is TCS. TDS is only on the interest income paid by the bank. TCS is where tax is collected at source. Above for 7 lakhs, over 7 lakhs, 0.5%. Medical treatment education, other than back loan, nil up to 7 lakhs, 5% over 7 lakhs. LRS other purposes, business visit, private visit, gift, donation, all those things. Nil up to 7 lakhs, 20% above 7 lakhs. Purchase of overseas tour packages, 5% till 7 per lakhs, above that 20% thereafter. So these are all important things which we have to understand under TCS. Good enough? So we have seen LRS transactions and we have seen things. One more important questions which will be coming, which is a capital account transaction, is import of currency, export of currency. How much currency we can import into the country? How much currency we can export out of the country? And how much Indian rupees, how much foreign currency? These are the stipulations for import of currency. If somebody is coming from abroad, if he is remitting through banking channel, there is no limit at all. But if he is bringing physical currency notes up to $5,000 or traveler's checks up to $5,000, total put together 10,000, no declaration is required. If the cash is more than $5,000 or the total amount including traveler's checks is more than $10,000, he has to submit one currency declaration form. It's called CDF. Okay, there is an examination point here. They ask in the examination, what is the requirement for submitting currency declaration form? Sometimes they will not use the word currency declaration form. They say simply CDF. What is that? About $10,000 or equivalent any other currency. Out of that, currency should not exceed 5,000. Let's suppose 2,000 currency, 8,000 TC allowed. 7,000 currency, 3,000 TC not allowed. It is requiring CDF format. If somebody is bringing Indian rupees, then maximum is 25,000. If he is coming from Pakistan and Bangladesh, it is 10,000. Okay. Our Saurabh sir has a question whether these TCS rates were there, new ones which are applicable. Yes, they are new from 1/10/2023. Prior to 1/10/2003, it was only common thing. Only 0.5 for loans availed under educational loan and remitted. For all other up to 7 lakhs nil. Above that it is 5%. Now they have changed the rates. Good? Yeah. Now export. This currency declaration form has to be submitted at the airport to the customs authorities, declaring, let's suppose I am bringing $20,000. Then I'll take this currency declaration form, I'll declare, sir, I am bringing $20,000 in foreign currency USD. Sometimes they will insist you write the note numbers also. So then they will certify it and give it back to us. Whenever we are creating these currency notes in the branch for converting them in Indian rupees, if branch is accepting that, they must insist for the CDF format. Good. That is a question for Sirisha about declarations. Export. Okay. Foreign currency export. How much currency we can take? As per LRS scheme, we can take up to $250,000. Can I take entire $250,000 in foreign currency? No. It is only $3,000. If we are going to Iraq and Libya, 5,000. Okay. Entire amount. If we are going to Islamic Republic of Iran, Russian Federation countries, republics of Commonwealth, of independent states, entire $250,000 I can take abroad in foreign currency. Okay. Last time this was the examination question. If somebody is going to Islamic Republic of Iran, how much currency can carry in physical format? This is the question. Remember. What Deepak Sant wanted, explain limit again. Limit again means this one. This one. You wanted TCS limit or you wanted currency limit? Deepak, which we want? Currency limit or TCS limit? Currency limit. Up to $5,000, no declaration. Above $5,000, declaration. $5,000 plus traveler's checks, $1,000, $10,000, no declaration. Above that, declaration. What is the declaration? Currency declaration form. Whom they will submit? To the customs authorities. When we are accepting cash for crediting to the account, we need to obtain the CDF format. When somebody is going outside the country, how much he can take? Then I said 3,000, 5,000, then Islamic Republic of Iran, Russian Federation, all those things, entire amount. If somebody is going on Hajj or Umrah pilgrimage, then the committee of Hajj committee will specify what is the amount permitted for individual to take. Let's suppose the committee says $50,000. Entire $50,000 can be taken in the foreign currency. Good. Nepal and Bhutan, no foreign currency. Indian rupees also not exceeding 25,000. Okay. Then, whenever we are going abroad, how much Indian rupees we can take? The maximum limit is 25,000 rupees. So, if I am going to USA, I can take foreign currency up to $3,000, Indian rupees up to $25,000. Entire amount, the other remaining amount under LRS, I have to send it through banking channels. Take a demand draft or make a SWIFT transfer and do it. Good. These are the important things we need to understand. Now, a person has gone abroad, coming back. When he going abroad, when can the bank release the foreign currency to him? 60 days prior to travel, not beyond 60 days prior to travel. Then he's coming back. How many days he has to surrender the currency to the bank? 180 days. Means a person gone abroad by taking money under LR scheme, he is coming back and bringing back some money with him. He can have time up to 180 days. In all other cases, they should be surrendered in 7 days. Let's suppose an NRI is coming to India. He brought some currency with him. He should surrender to the bank within 7 days. If a person has went abroad, gone abroad, he is coming back, means 2,50,000 he has taken, he did not spend it, 2 lakhs he brought. He has time up to 180 days to put it, give it back to the bank. Then he can hold foreign currency in physical notes up to US $2,000. Whenever I say USD terms, USD or equivalent in other foreign currency. Let's suppose he is bringing euro, then it is not 2,000 euros, it may be 1,800 euros. Let's suppose he is bringing GBP, it is not 2,000 GBP, maybe 1,600, 1,700 GBP. So that is what we have to understand. Okay. One more slide. FCNR accounts. Okay. Here 3 points you remember. FCNR accounts are only term deposit accounts. Minimum period is 1 year. Maximum period is 5 years. Okay. Rate of interest is always linked to one benchmark rate called ARR, alternate reference rate. This alternate reference rate is given by FBIL, Financial Benchmarks India Limited. Earlier, this rate was given by FEDI. Now the rates are given by FBIL. Okay, this is another examination question. Another question. Whenever joint accounts are opened, an NRI can open a joint account with another NRI. But NRI can also open a joint account with a citizen of India. Like, let's suppose my son wanted to open an account with me as a joint account. In such cases, operational instructions have to be compulsorily FRS only. Farmer or survivor, farmer is always NRI. Okay, these are other important guidelines. Okay, then when opening accounts, inward remittances, funds in NRE can be transferred to FCNR, but the funds from NRO cannot be transferred. No additional interest. Entire amount in this account can be transferred or repatriated outside the country without any restrictions. Next we go to ECGC. Quickly I am taking this, your examination questions are there. ECGC, some important things. There is a country risk. Okay. ECGC has classified all the countries in the world into 7 categories. A1, A2 like that. In last time examination, they asked the question. If ECGC has classified country risk of a particular country as C2, what is the risk rating of that country? High risk, very high risk, moderate risk, or low risk? Such questions will come from this particular slide. Remember that. Another thing, whenever the ECGC is guaranteeing the bank's advances, they give two types of coverages. One is called policies, second is called guarantees. Policies are for individual exporters. These are all for exporters only, not for importers. They are all for individual exporters. Whenever banks are giving pre-shipment credit or post-shipment credit, we give two types of financing for exporters. Pre-shipment credit, post-shipment credit. All pre-shipment credit advances are covered under ECGC scheme. The scheme is called WTPCG. WTPCG. All post-shipment advances are covered under WTPSG. WTPSG. Okay. Now, I don't know, you wanted the previous slide. Okay, this is the previous slide. Any questions here on the previous slide? One is WTPCG, another WTPSG. Sometimes a question will come in examination. All pre-shipment advances are covered by WTPCG, WTPSG, EPCG, yeah, like SME. We have to be very clear, pre-shipment, WTPCG, post-shipment, WTPSG. What are the risks covered? Another examination question. Commercial risk, political risk. These are, you have to memorize these slides for examination point of view. Okay. Then what are the things not covered? These are the things which are not covered. They're all self-explanatory, no more explanation. Then another examination question about the premium. How much premium we collect? Remember, in case of pre-shipment advances, WTPCG, okay, in case of WTPCG advances, the premium is 8 rupees 50 paisa per 100 collected from the borrower. It's collected from borrower. Remember this. WTPCG advances, premium is 8 rupees 50 paisa per 100 collected from the borrower. All post-shipment advances are covered under WTPSG. The premium is 6 paisa per 100 borne by the bank. Borne by the bank. Okay, somebody wants previous slide. This is the previous slide. Good enough? Yeah. 6 rupees 50 paisa. 6 paisa per 100. Not 650. 6 rupees, 6 paisa per 100. WTPCG 8 rupees 50 paisa per 100. Good? Yeah. What are the risks covered? I already showed you. These are the risks covered. Commercial risks, political risks. What are not covered? These are the risks not covered. Yeah. Divak Gupta ji, the session will be like this only. Little fast. You have to understand, put your concentration, understand. Subject is lengthy. That's why it is going a little fast. Again I told, PCG advances, borrower has to pay. PSG advances, bank will pay. Two more important questions here. Discretionary limit is 3 crores for our bank. What is discretionary limit? Whenever we are sanctioning pre-shipment advances or post-shipment advances, we can sanction up to any limit. But if we are dispersing a limit more than 3 crores, we need to take permission from ECGC. Up to 3 crores, we need not take any permission. Let's suppose we have sanctioned a borrower pre-shipment credit. If the limit is up to 3 crores, we can sanction, disperse, and intimate the ECGC. Intimation is very much required. Let's suppose we have sanctioned 10 crores. You can sanction the limit. You can take the documentation. Before disbursement, we should take permission from ECGC. That's what we call discretionary limit. What is the discretionary limit? 3 crores for our bank. Okay. One more important slide. whenever there is a default, we need to inform the ECGC within 4 months from the date of default. Default is different, NPA is different. Default means overdue position. NPA means 90 days after overdue position. The moment it becomes a default account, immediately within 4 months, we should inform the ECGC. If we do not inform within 4 months, claim will not be settled. Then, after informing the default, within 6 months, we should lodge the claim. Let's suppose I informed the ECGC in the month of November. Then within 6 months from November, I should lodge the claim. Remember this 4 months, 6 months, then what is that? Discretion limit, premiums, and risk coverages, not covered, which are covered, okay? What are the policies, and what is the country risk? These are all very important from the examination point of view, at least up to scale 4. Okay? Now, some questions we'll take. Which charges bank will pay and customer? All WTPCG, packing credit advances, 8 rupees 50 paisa, borrowed by the borrower. Higher amount they pay. In the case of WTPSG, bank will pay. That is Aman's question. Kalyani's question, within 3 million, 3 crores, account will become NPA, na sir? 3 months. No, after 3 months, it becomes NPA. Yeah, 3 months NPA from the date of default. So once we categorize an account as a default account, immediately we have to inform ECGC. But of course, we have 4 months time. Maybe once the account has become NPA, another 1 month still we have. Okay. Then any more questions? Lodging claim. Yeah, 6 months from date of informing the claim, informing the default. In case of PC limits without collateral, CGTMSA coverage is also required in addition to ECGC, or alone ECGC coverage is required. As far as the packing grade advances are concerned, they are already covered by the ECGC guarantee. If it is covered under CGTP MSC, normally, once the packing grade advances are specific advances, so we do not normally cover it under CGT MSC. We cover it only under ECGC. 4 plus 6 per claim, you are right. 6 rupees or 5 paisa. Why this question 6 rupees 5 paisa is coming frequently? I don't know. Okay, 6. Oh, that is not clear. Rupees 6. Sorry, 8 rupees 50 paisa. I'm sorry. I think yeah, you have a right point here. It is not. Sorry. You have a right point. It's not rupees 8.50. It's 8 rupees 50 paisa. 8 rupees 50 paisa. Yeah, and 6 paisa. You are right. I think you are rightly pointed out, Rajkumar. Thank you. It is not. I was telling rupees 8.50. Not correct. 8 rupees 50 paisa. 6 paisa. Yeah, I stand corrected. Thank you. Thank you, Raj. Thank you. Good. In your bank mentioned as 6.50 paisa. In your book. Okay, let me check. I think from book only I have taken it is 6 paisa, but let me check. Okay, let me check. No issue. I will check it up and accordingly let you know tomorrow. No issue. Now, let us talk about some Union Bank products. We have certain products for Forex related areas. Usage payable at site letter of credit. Okay. Then there is Union Bank product, track Union export. There may be a question on this Union export. So there are certain limits, certain amounts, certain caps. Remember that Union export. Then we have one more system package called tracks. This is for all import and export transactions. All import transactions are dealt through one package called IDPMS, Import Data Processing and Monitoring System, IDPMS. And all export transactions are dealt through EDPMS, Export Data Processing and Monitoring System. Our bank has implemented one common package for both of them, and it is called tracks. Okay, what is the full form of tracks? I'm not aware, but it's TRRACS. Okay, tracks. This may be a good examination question. Remember, tracks is the software we are using for import and export transactions for reporting purposes. Good. UPS slide, Union export, then letter of credit, UPS letter of credit. Any questions you have? Kindly address fast. Otherwise, I will hand over the sessions to our Kulkarni sir, or if he permits me, I will take 10-15 minutes for the Basel guidelines.
Thank you, sir. Thank you so much, sir, for showing your
Okay.
classes for the
Yeah.
benefit of all officers. Now we hand over the class to Sri Pradeep Kulkarni, sir. Thank you.
Yeah.
Welcome.
Yeah.
Yeah.
Okay.
Thank you, Murthy sir. I think after such a what you can say spellbound talk on forex related activities, we are going back on very normal kind of banking related questions, and I'm sure that banking related areas, I'm sure that participants have immensely benefited with the coverage within a span of 1 hour. Good amount of coverage we have had, and I think participants will appear for forex questions with bit confidence. Okay, I think before saying that, sir, to be very frank, let me tell you, right from morning to now, means morning 9 o'clock to evening up 8:30 now, up to this point of time, continuously he is on, either on wheels or on class. I think he needs a big round of applause from all of you. Okay, and sir, you have due permission. I think you can have your dinner and carry on.
Yeah.
Okay, thank you.
Sure,
and
sir.
let me begin now. Okay.
Yeah, sure. Thank you very much, sir. Thank you.
Thank you.
Yeah.
And friends, yesterday what we covered, if anyone has got anything to ask, please ask before I begin myself for doing or dealing something else. Any questions or anything you feel that need to be invariably covered, any such aspects if you have in your mind, please share.
Sir, just 1 minute. Somebody
Hello.
was asking about the premium.
Yeah.
In our book also it is mentioned as 6 paisa per 100. Okay, not 6.50 paisa per 100.
Yeah.
The book before me, it is 6 paisa, page number, whatever is the page.
Yeah.
That's only correction I want to make. My slide is okay. It is only 6 paisa. Carry on session, sir. Thank you very much.
Yeah.
Good night to all of you.
Okay. Now, anybody, any doubt, anything they wanted to ask, please, you are most welcome. Hello. Because once I start, then I think we'll be going ahead with something else. Okay. Time limit for intimation covering. Okay. That I think we won't be able to really go in deep with regard to forex, because forex is only one component. Okay, in the entire banking related areas, forex is a component which normally skips attention of the most of the bankers. That's the reason forex 1, Basel 2. These are the two important areas we have picked up for detailed discussion, because they have a little less attention as well as absorption by the participants. Okay. Let me now begin where we have left yesterday. Okay. But before that, as I promised to you, let us start with the recollected questions. And recollected questions also will begin with from where we have left yesterday. Okay. And that part, I am sure that we have left the area from this part. Okay. Yeah. Chalo. Hello. Is it screen visible? Hello. Whether screen visible?
No, sir, no.
Yeah.
Now it is
visible? Yeah.
Yes, sir.
Now we are starting with recollection, because just we have to change your track, and that is the objective behind it, nothing else. Yeah. Just see what kind of other questions, or other than forex, are likely to be there, because these are all questions were there in the previous year 1 to 2, 2 to 3 exam. Okay, 1 to 2, 2 to 3 exam, these questions were there. What is the capital to risk weighted assets ratio requirement for banks in India, including CCB? How much? Number 2, MSF rate. Number 3, LTV of housing loans, where the risk weight is 35%. Okay. And then components of MCLR and income tax return due date, penalty for late filing, and very, very important section 92 of banking. Everywhere you will get, everywhere, means right from scale 1, 2, 3, 4. Only the complexity of that particular question is different with regard to that. Answers are like this. Including CCB, 11.50. Okay, capital conservation buffer. Okay, counter cyclical buffer, capital conservation buffer. Then MSF rate 6.75. Okay, then LTV is wherever 35%, that is wherever LTV is less than 80% or less. MCLR, marginal cost of funds, negative carry on CRR, operating cost, and tenor premium. In addition to this, banking, we are following at present the external benchmark based lending rate. And for the purpose of external benchmark lending rate, there are external benchmarks such as the repo, as well as FBIL declared, FBIL, Financial Benchmark India Limited declared multiple benchmarks. Any one of them can be a basis for that. Okay, there are 5 benchmarks differently quoted. Have a visit to that. Then next, penalty for filing delayed return, 5,000 if filed after due date, but up to 31st December. Okay, up to 31st December. Then again, there will be an additional interest liability on the due income tax as well as. Then, as per section 19.2, that is 30%. And you need to remember this important aspect, that is paid up share capital of the company and paid up share capital and reserves of the bank. Okay, banks paid up capital and reserves, whereas companies only capital, paid up capital, 30%. That is the way you please remember it. 30% is common, whichever is less. Now, next. So all these questions, recollected questions, at the specific request only, I have incorporated. Limit for priority sector lending under healthcare and social infra. SHGs managed by women in India, which state is the highest? 4 pillars of KYC AML policy. Then BSBDS. What is that? Financial transaction limit and balance restrictions. Maturity period for PPF. And ratio of long-term borrowing funds to own funds can be best described as. Very, very simple questions are there. I'm sure all of you are in a position to address. And we will discuss the KYCML policy in addition to the pillars. Okay. Now, priority sector lending healthcare, it is 10 crores per borrower. Okay. Bank loan up to a limit of 10 crore per borrower for health, particularly under Ayushman Bharat. Okay. Otherwise, it is 5 crore. Number 2, the state with maximum number of SHG, not the Andhra Pradesh, not the Telangana, it is Bihar. What are the 4 pillars of KYC? Customer acceptance policy, customer identification procedure, risk management, and monitoring of transactions. Financial transactions and balance, that is total credits in account not to exceed 1 lakh rupee in a year, maximum balance of the account not to exceed 50,000 at any point of time. And these guidelines, same guidelines can also be understood as the guidelines for small accounts. Okay, for BSBDS is nothing but small account. Okay, maturity period for PPF is 15 years. Okay, further extended by a period of 5 years. And debt equity ratio. These are the few questions I thought we'll discuss before proceeding. Bank has no physical presence in the country in which it incorporated and licensed. Such a bank is termed as shell bank, which is an employment-oriented scheme out of the given option: PMEGP, Mudra, Day NULM, MNRGA. Overdraft in a Pradhan Mantri Jan Dhan account can be sanctioned up to a maximum of, okay, 4 times. Okay, for last 6 months, 4 times. What is the minimum and maximum tenor of domestic NRO deposit? As usual, our domestic deposit, whatever it is there, that is the same minimum, same maximum. Okay. Then foreign student in India, just now I think sir was talking, foreign student in India opening NRO account, what is the limit for inward remittances? And that to withdrawal during the 30 days period where address is pending. This question repeatedly comes. Prior notice of at least what period is given by the bank to customers in case change in service charges. ECGC required if export bills are not realized after a period of. Then as per the existing guidelines, minimum leverage ratio be maintained by the banks in India for DSIB. What is DSIB? Domestically, systemically important bank. And for other banks. Who issues accounting standards in India? Here are the answers. Okay. See, leverage ratio started implementing in a country and now 3.5% is for other banks and 4% is for DSIBs. DSIBs need to carry the additional tier 1 capital also. Okay. And additional tier 1 capital requirement for DSIB is differs for State Bank of India and the private sector banks. That is ICICI Bank as well as the IDBI Bank. Okay. Who issues accounting standards? ICAI. Okay. And prior to 30 days notice is compulsory. Foreign student can maximum get the inward remittance USD 1,000. Okay. And he can withdraw up to 50,000. These are the few questions. I think please make a note of it. Okay. And then day NRLM, day NULM, that these are the standard questions for 1 to 2, 2 to 3. Make a note of that. Okay. One or other point is definitely there. What is the effective rate of interest identified district to woman SHG under day NRLM? Advance deposit can be taken by the bank from locker hirer if the locker rent is this much and break open charge is 2,000. Unsecured exposure means what? And what is the what should not be more than? Security assets created out of the bank loan is primary security. Okay, then 4% earlier, but now no provision as per the latest guidelines. Okay, what is the maximum amount of advance? 7,400 per year. If it is there, then it will become 24,200 because 3 years rent plus break open charges. Okay, now whether your locker policy or the RBI guidelines, it goes together. Similarly, unexport exposure, unsecured exposure, not to exceed 10%, more than 10%. Okay, and then any security created out of the bank loan is a primary security. With this, I'll stop. What is the landholding criteria for medium farmers? Landholding criteria for small farmer? PMFME scheme. Yesterday itself we saw that penalty payable by bank for failed ATM transaction. What is the surrender value? I think all questions are now repeated for other scale also. Other scale also 3 to 4 questions. Okay, you can see. So this is how questions goes. I think we will stop here and go back to our class. Okay. So union power, that is project power. Before I discuss the project power, I think let me complete the bank, the other aspects relating to that rather than talking about the project power, because this project power can be well learned by you at your own level also. Okay, what could be the problem is this, there are few things relating to Copra. Yesterday we left over, and one important change recently happened with regard to a right of lien, and that you need to please make a note, because there is a judgment and which that is very impactful judgment came. Okay, otherwise based on that, whether banker's lien is a particular lien or banker's lien is a general lien, that kind of doubt can raise in the minds. Okay, these parts, very simple part, I don't think we need to spend. Okay, what is the relationship when customer is depositor? What is the relationship when customer is a debtor? Okay, make a note of that, because when deposit maintain, the bank is credit, bank is debtor and customer is creditor, Okay, that list you have. In that, only one important thing, that what is the relationship when bank has received the order NISI and bank has informed the court about the balance in the account. What is the relationship between bank and the court? That is Garnishi and the court. What is the relationship? Okay. Now, such typicalities are now being questioned. Okay. Tomorrow. Okay. Today, now this part gets completed. No, tomorrow I'll be sharing. Okay. Duty to honor the check. I think section 85(1), section 85(2). Okay. Section 85(1), section 85(2), both the things covers, that is order check as well as the bearer check. And as per the order check concern, bank definitely need to honor a check provided it is drawn in an orderly manner, and when there is a balance available in the account and check is drawn otherwise in orderly manner, and there is no stoppage by virtue of any garnish order or attachment order, bank is bound to honor the check. And even then the bank dishonors, then bank is liable for compensation for unlawful dishonor. Okay, unlawful dishonor, this is the word, very important. Then lien. Bank lien is a general lien, and there are two type of lien, general and particular lien. So the difference between that was very, very blurred because of a judgment. Okay, and based on that judgment, the concept of general lien, the court and assumed is that the general lien of a banker is true, but general lien will continue only when there is no contrary contract exists. And as a result of that, what happened? A particular person has availed a housing loan and his property documents were kept. And as per your term loan, means that bank's term loan agreement, at the end of the loan, that is, if the loan is repaid fully, this bank is taking a binding that it will invariably return the property documents. Okay, and that kind of conditionality observed by the court, and says this kind of restrictive condition is there in that contract, and therefore bank cannot hold that document for the sake of any other loan. And as a result, the whether bank lien is a general lien or particular lien, please remember, bank lien is a general lien. Now only the thing is, wherever such kind of clauses are there in our agreement, I think our law officers need to sit and they may have to change. Okay, exam question comes, then make a note, this is the law. Appropriations, garnish order, attachment order, I don't think many meaning. Yesterday RBI IOS I have discussed. Anybody has got any doubt, any question, please ask. Okay, COPRA I'll discuss now. Okay, Consumer Protection Act I'll discuss, and I'll move ahead. Okay, before that, on these all aspects, there are few questions you can answer at your own way. Okay, don't try to type out the answer, just take the answer and then let me know. Yeah, which of the following is not correct regarding right of lien? Gives power to retain, not to sell. It is lost when the possession is lost. It is a statutory right. Banker lien is a particular lien. None of the above, which is not correct. Banker's lien is a particular lien is incorrect or not correct. Okay. Then next, right of lien is available on goods and securities only, deposits in the bank, A and B. Okay. Okay, please make a note. Right of lien is available only on goods and securities, not on the money or balances in the account. Okay. Now, sir, we mark lien. That may be your point. Please say that lien is marked on the basis of a declaration received from the customer to mark the lien. Okay. Or permission from the customer to mark the lien. And that is the reason we obtain letter of lien from the customer. Okay. Limitation period for lien. There is no limitation for lien. Now, similarly, X has a SB account balance, something he has an OD of 15,000, which is not time barred, which is time barred. Can the bank exercise right of set off? Loan is overdraft, means time barred, means there is no right to file the case in the court. Can we do? Yes, you can. Yes, you can. Because while exercising the right of set off, there is, because banker enjoys that right, banker's right to recover is not lost. And another question comes with regard to banker's right of set off, whether it is a statutory right. Lien is a statutory right, not the right of set off. Right of set off is a customary right. Okay. I think these are few questions I thought I'll share with you, discuss with you. I am not going to discuss all the questions. Okay. Then consumer product. I'll share these questions to you. Okay. This entire presentation I'll be sharing. Please make a note. Consumer Protection Act. There, the grievance handling machinery. Customer can make a complaint either to Banking Ombudsman or to the Consumer Redressal Commission. District Consumer Redressal Commission. Cases up to 50 lakhs. State Consumer Redressal Commission, cases more than 50 lakhs and up to 2 crore. And the National Consumer Dispute Redressal Commission, more than 2 crores, any amount. This is what. Earlier, as per the Consumer Protection Act 2019, the limit for State Consumer Commission was for more than 1 crore up to 10 crore, and for District Consumer Commission, more than 1 crore was there. But subsequently, the guidelines were changed during the COVID time, because that time only rules were framed and these guidelines undergone change. Law is telling something, thereafter the law amended and modified guidelines. Important point under the this Consumer Protection Act is, earlier no such authority was there. Now Central Consumer Protection Authority is appointed. Then that too headed by a Director General level person, and to protect, promote and enforce the rights of the consumer. And which are all the rights of the consumer? There is a big list. Okay. And he has got a very wide power. He can take suo motu action. He can recall products. He can cancel the license. He can file a class action suits, and he can order reimbursement of the price of the goods. These are all the actions the CCPA can take. What is CCPA? Central Consumer Protection Authority. And there are many other provisions are inserted in the Consumer Protection Act 2019, such as the online complaint making, online case hearing. All these things are incorporated in revised guidelines. Even the brand ambassadors for the product. Okay. Those product that product ambassadors are there, or sponsors are there, those people also can get punishment in case the something what they are telling is different from the quality or the features of the product. Okay. I think these are the few things. Now, so frequency of customer service meeting for a branch, monthly once. For a region, monthly once. Okay. And for a zone, it is quarterly. Okay. And the customer service committee, branch, RO, FGMO level customer service committee, that customer service committee is once in a month at a regional and branch level committees, once in a quarter zonal level committees. Who are all the members? I don't think there is important. Exam question came. Central Receipt and Processing Center located at Chandigarh. Okay. And the maximum how much compensation can be awarded given for mental agony? 1 lakh. Okay. The ombudsman shall have the power to provide compensation up to rupees 20 lakhs. Okay. And this aspect yesterday only I dealt. And I think here is a small change. See, now offices of 22 are increased from 22 to 30. Okay. And they are known as RBI, ORBIO, offices of RBI Ombudsman, offices of RBI Ombudsman. And these 30 are not ombudsmans. These are only offices of RBI Ombudsman. Okay. Ombudsman is only one. Then under him, there is a deputy ombudsman. And these two people are, okay, a high rank authority, that is CGM and above rank in Reserve Bank of India. Okay. Such people are being posted as. Okay. Yeah. Now, this part I have discussed, I think. Yeah, this is important thing again. Internal ombudsman scheme is there. That is internal ombudsman scheme 2018. And as per that scheme, any bank which has got more than 10 branches operating, they have to definitely have to have an internal ombudsman appointed. He is not a regular employee of the bank, posted from other branches. And now, after the customer's complaint is resolved by the bank, if anyone has got any grievance, he can approach first to internal ombudsman. He will try to resolve. Okay, he will try to resolve, and then in case even that is not solved, then matter may be going to the integrated ombudsman. Okay, these are few functions of the bank, and based on the function, your area of preparation. Okay, so these are the deposit functions, overdraft functions. Then here is a transfer. Okay, portfolio management. Okay, agency functions such as doing the insurance, making the insurance policy, selling. Okay, utility function, underwriting. Okay, then social welfare programs. All these are the functions which are added functions known as secondary functions. Now let me cover very significant important aspect relating to KYC very quickly. One page KYC details, only one page. Okay, no more blah blah. KYC guidelines are issued by RBI under Section 35A of Banking Regulation Act. KYC guidelines are applicable to all financial institutions, banks, as well as all other every regulating authority that they are being asked to regulate the financial institutions such as insurance company, mutual fund companies, and the NBFCs, as well as the all other financial institutions. They are subjected to it. Not only financial institutions, but also the telecommunication authorities also, they have a directions for ensuring KYC compliance. And when it comes to the bank receives the guidelines to frame the KYC policy under Section 35A. Broad guidelines are given, and under which every bank need to frame a policy. And policy has to have 4 pillars. Just few minutes ago we have discussed. So I am not going in detail what is customer acceptance policy and blah blah. But these words, please make a note. CKYCR, VCIP, Aadhaar enabled KYC, and small accounts. These 4 are very significant. Under CKYCR, Central KYC Registry, which is established by Reserve Bank of India and managed by CERSAI. Managed by CERSAI. And exam question came that since it is established by RBI, whether it is managed by CRILC. So CRILC is managed by Reserve Bank of India, but this CKYCR is managed by CERSAI. Okay. Number 2, CKYCR, every customer who is opening a bank account, he will get a 14-digit ID, and once he gets the CKYCR ID, thereafter he need not have to give any document to any financial requirements to any authority unless and until there is a period of re-KYC over. Okay. And that re-KYC ombudsman award amount is 20 lakhs plus 1 lakhs. Okay. 20 lakhs plus 1 lakh. 20 lakhs in a general sense and 1 lakh for mental agony, harassment, and the cost reimbursement. Okay. Rajesh Babuji. Then these 2 things with regard to CKYCR. And CKYCR is a registry where data is stored and data can be retrieved by the participating all financial institutions, banks, insurance companies, mutual funds, etc., etc. Video-based CIP, 2 things are important. That is, one thing is that there must be a PAN and there must be other identity, valid identity proof. And by holding these 2 documents, the person need to complete his video recording, and that itself will be considered as customer identification procedure. Aadhaar enabled eKYC is done by the banking correspondents. Okay, banking correspondents who are opening the account remotely, and whenever the Aadhaar enabled KYC is done at a remote place without having face to face, there also some restrictions are there with regard to operations in the account. And those restrictions are just double the small account. Means, for example, for small account, what is the maximum balance? 50 lakhs, 50,000. Am I right? And whereas for we that eKYC, Aadhaar based KYC done accounts, it can be 1 lakh. Okay. And total turnover here 1 lakh, there 2 lakhs. And any Aadhaar enabled eKYC based account, their maximum loan that is given, and that too only term loan of 60,000 maximum can be given. So these kind of restrictions are there with regard to Aadhaar enabled eKYC done remotely without face to face by the customer. PAN is not a identity document. PAN is a compulsory document. In case customer doesn't have a PAN, he has to submit Form 60. Then these are all the documents which are considered as OVD. OVD stands for officially valid document for identity. Similarly, there are documents which are limited purpose of residence verification. Those are residence proof, you call it as, and they are the any utility bill or tax paid receipt or like that. These documents, any utility bill is a valid only when it is not more than 2 months old. Okay, this is what factor. Similarly, whenever the customer is a low risk category customer, he just gives a re-KYC, updates all the things, but he says that there is a change in the address. In such case, earlier period was 3 months. Now it is bank need to complete the customer identification procedure in just 2 months. Second change is happened with regard to who is a customer. Along with the customer, there is a word called as beneficial owner. And beneficial owner guidelines were different with regard to company, trust, and the partnership firm, like that. Now all they are being uniformly made. Wherever the ownership or the part in the profit is or part in the benefit is more than 10%, then all such people identity documents need to be obtained in addition to the entity document. Partnership, obtain the document relating to partnership. In addition to that, obtain the document of the partner who has got stake in that partnership more than 10%. Is it clear? Similarly, a company, limited company, private limited company, there can be how many members in a private limited company? Minimum members can be 2 and maximum can be 200. Now, whether 200 people document is required, not required, then whose documents are required? The person whose shareholding in that company exceeds 10%, all such people, they have to submit the documents relating to their ID, residence proof, as well as identity proof. Is it clear? There, that's the way concept of bank beneficial owner. Okay. This is the recent change happened. These are the two important things. Please make a note of it. Then maintenance of record. Which records? There are two set of records. One is a identity related documents and account opening form, and second is a transaction related details. Transaction related details, bank need to maintain the record for a period of 5 years from the date of transaction, whereas the data relating to identity as well as account opening are required to be maintained for a period of 5 years from the date of closure of the account. Okay, these are the two important things with regard to maintenance of data. And this transaction monitoring goes along with the risk categorization. Accounts are categorized under the three different risks: low risk, medium risk, and high risk. And while categorizing the risk, these guidelines need to be understood that they have nothing to do with your identity, but they are more to do with the source of money coming into the account, verifiability by the bank. Wherever there is difficulty in verifiability, account goes in high risk category. Wherever there is easy for verification, account goes low risk category. And as accordingly, the salaried people, housewife, okay, small businessmen, farmers, they come under low risk category. Trust, associations, okay, or the game organizers, or the what you can say, the non-resident Indians, they come, or the politically exposed person need not have to be understood as the persons who are connected to politics. Please don't mistake it. persons, PEPs are those people who are appointed by the foreign country and they are in our country as ambassador. And for such people, when we open the account, we have to treat them as PEPs. Secondly, the Joe Biden, he wants to open a bank account here, then politically exposed person. So domestic PEPs, foreign PEPs. The guidelines relating to PEPs in a country are not the domestic PEPs, but foreign PEPs. And see, our KYC AML guidelines are KYC guidelines, AML guidelines, and CFT guidelines. AML guidelines, as per AML guidelines, you have already maintaining the records, you are monitoring the transactions, and you are reporting the transactions. Under this reporting, STR, CTR, and CCTR. Reportings are STR, CTR, CCTR, and NPTR. And cross-border wire transfer transaction report. These are the reports bank need to submit. Whom the report need to be submitted? A report need to be submitted to FIU IND. FIU IND. Is it clear? And this FIU IND, except for cash transaction report, except for suspicious transaction report, all these reports are monthly. All these reports are monthly, and all monthly reports by 15th of the next month, bank need to submit. Branches will not submit these details. Branches will just maintain the record, except the suspicious transaction report. This need to be initiated by the branch. All other things are being generated at the corporate office level by the KYC department, and then they accordingly submit it. CTR for 10 lakhs and above cash transactions in the account. 10 lakhs, more than 10 lakhs cash transactions in the account in a month. Series of transactions or even the interconnected transactions. Okay, all that cash transactions need to be taken. CCTR is counterfeit currency transaction report. Irrespective whether whatever number of currency notes are received as a forged currency notes, whether 1, 2, 3, 4, any number received, even no received, you have to submit nil, but you have to submit the CCTR invariably. And CCTR, one copy goes to FIU IND, one copy goes to RBI, and a copy goes to the police authorities in the jurisdiction area. So that's what a compulsory thing. In case the counterfeit currency notes more than 4 received in one remittance, then bank also required to file an FIR. And FIR will not be filed by the branch. It will be filed by the nodal officer for the purpose appointed by our bank. Okay, so these are the guidelines relating to the anti-money laundering. Okay, and then third thing is, okay, that is cross-border wire transfer. Cross-border wire transfer, any amount more than 5 lakhs. And NPTR, non-profit entity, receipts more than 10 lakhs. Receipts more than 10 lakhs. So that's the way you have to remember the reporting activities. And then with regard to CFT, branches and subsidiaries in the foreign country, they need to adopt the strict regulations of either of us, means ours or theirs. Whichever is strict regulation, that need to be followed. And no question of banking as a correspondent bank with shell bank. Shell bank means what? We have seen in the earlier slide. Any doubt, any question with regard to KYC, please ask. Yes, suspicious transaction within 7 days. 7 days from which day? 7 days from what? 7 days from what? So what is STR? Suspicious. Suspicious transaction means a transactions not in tune with the profile of the customer. To understand it very simple way, you have opened an account in the name of a XYZ who is a student. Now, when a person is a student, what kind of things can come in his account? Your system knows, isn't it? And in such an account, if there is a transaction of huge value, then your system shows alert that there is something wrong with the account. Accordingly, you need to identify what is that suspicious, and suspicious in terms of any illegal money is being routed through this particular account. Okay, that is what is a suspicion. Okay, because it should protect, means bank should protect themselves from not allowing the bank account to route the money earned by illegal activities. Okay, this is what. And from the date of identification, not detection, from the date of verification, finalization, because branch do not have authority to say this transaction is suspicious. Branch can only report suspicion, and there is a committee, fraud risk management cell. In the fraud risk management cell, there is a committee at the zonal level, zonal office level, which decides whether the transaction is to be treated as suspicious or not. Is it clear? Shell Bank is a bank registered in one country, licensed in one country, and operating in altogether different country, where no question of, means the country where it has established registered, there it doesn't have any presence, so no regulatory compliances are made. And the country where it is operating, there there is no regulations, no much regulations on such bank. Such a company, such a bank is a shell bank, means established in one place, one country, and operating in altogether different country without complying with requirement of a regulator. So such a bank is a shell bank. And strict guidelines of CFT are no question of any correspondent arrangement with CFT. Any other question, please? This is Kevin. And I wish all of you, please visit the IBS Institute of Banking Studies YouTube channel. And there I have got a wonderful video on KYC. 10 minutes video lecture is there. Within 10 minutes, your entire KYC is brief manner explained. You may visit it. Similarly, there is a video on DRT also, and both the videos you may visit and watch. 10 minutes videos are there. Okay. Now, this is the big difference between these two, KML and KYC. Okay. And I am sharing the presentation, so I don't want to read for you. Now, these are the basic CFT guidelines, because in examination 3 to 4, 4 to 5, these questions, because normally AML means KYC AML, that's what it goes, but it includes CFT guidelines. CFT guidelines is sanction list. Sanction list means the entities which are banned, entities which are treated as the terrorist activity. Al Qaeda sanction, 1988 sanction. And these two lists are being given by United Nations Security Council. And this Security Council, when it sends the list to FIU, FIU in turn sends the list to regulator. Then regulator sends the list to respective banks to see that anybody who is in the list or connected to the list, bank account should not be opened. Okay, that is under customer acceptance policy. Then under section 51A of Unlawful Activities Act, central government has got power to freeze the assets. Okay, these are all few things I think you keep in. YouTube channel name is Institute of Banking Studies. You type out and you will go there, and there you search for my video. Okay, there you search for my video on DRT, my video on the KYC AML. And this is another important area for 3 to 4 and 4 to 5. In no doubt it is. I don't say that it is not important for 1 to 2, but important for them, because principal officer, appointing a principal officer, and people get confused with designated director under PMLA. Designated director under PMLA is managing director, whole-time director, managing partner, managing trustee, whereas principal officer is a senior management officer designated by someone as a principal officer for KYC compliance, KYC AML guideline compliance. Is it clear? My YouTube channel is altogether different. There you don't find much important videos, because there videos are 2 year ago old, 2 year old, but knowledge based videos. So you can definitely visit. My video channel name is P2G Banking. Okay, P2G Banking, you type out, you will get. Okay, but please visit that video compulsorily. Then I want to discuss, okay, what is the time? Okay, let me know. Then so that I can go with few questions on important updates. Okay, it is 9:08. Is it time to go for, or after completing this banking regulation shall we go? Hello, we'll complete this. Very, very important. because every year you definitely get, every exam you get a question on banking regulation and RBI Act. So let me complete these two things and then you go ahead. Hope I am not so fast. Okay, no doubt it is fast, but not so fast that you can't grasp. Is it so? Can I get a comment? Speed is okay. Thank you. Thank you. Thank you. Now, Banking Regulation Act, I don't want to discuss about Section 5B, Section 6, and Section 8, Section 9. No. Section 9 for 1 to 2. Very important, because for 1 to 2, 2 to 3, the non-banking assets, such as immobile assets, they come in the custody of the bank. They come in the hands of the bank. Bank cannot hold for not more than 7 years period. Okay, for more than 7 years period, it wants to hold, then it has to make use of that asset for their own purpose. They cannot make hold of the property for more than 7 years and thereafter dispose. Okay, this is number one. This period can be extendable by another 5 years with the prior permission of RBI. Section 17, transfer of profit to reserve fund. As per Section 17, the guideline is 20%. Guideline is 20% as per Section 17. Section 17 says that every bank which is making profit, it has to transfer to reserve fund 20% of its profit. 20% of its profit. Whereas Reserve Bank of India says not 20%, dear banks, transfer 25%. Transfer 25%. Now, some of you are confused. Sir, एग्जाम में आंसर क्या करना है? 20 है कि 25 है? तो याद रखिए, आपका सवाल अगर बैंकिंग रेगुलेशन एक्ट सेक्शन 17 की बात कर रहा है तो 20%। अगर आपका सवाल आरबीआई गाइडलाइंस के द्वारा हमको हर साल इतना ट्रांसफर करना है रिजर्व फंड को बैंक वालों को, तो आंसर रहेगा 25%। इज इट क्लियर? इज इट क्लियर? ये बात कैसी हो गई? निगोशिएबल इंस्ट्रूमेंट एक्ट सेक्शन 18 की बात हो गई। निगोशिएबल इंस्ट्रूमेंट एक्ट सेक्शन 18 के अनुसार, section 18, as per section 18, the amount written on the check in words and figures, it is different. Which is valid? Amount written in word is valid and you need to honor the check accordingly. I am sure out of 463 people before me, none of the banker will dare to honor amount written in word. Clear? Is it clear? And please make a note, this reserve fund has nothing to do with CRR. CRR stipulations are as per RBI Act, section 42. Okay, this reserve fund is created by the bank at the bank level only. And this reserve fund is to augment the net worth of the bank and it has nothing to do with RBI. Is it clear? Now, next, this is, as I told you earlier, section 19(2), holding shares of the company, not more than 30% of the bank own capital and reserves, or the company's capital, whichever is low. Okay. Section 21, restriction on advances, guidelines with regard to advances, those things are there, part of your section 21. And the section 21 deals with which are all the advances which you are not supposed to do. For example, no loan against bank's own shares, no loan against partly paid shares, no loan against the bullion, gold or raw gold, no loan to the directors of the bank beyond a particular limit. All these things are part of the section 21, restricted advances. Okay. Then section 22 is about the licensing. Section 24 is about the SLR, and section 35 is about the inspection carried out by the bank, and section 35A, multiple things, RBI IOS, validity of check, note refund rules, KYC ML guidelines, all are from under the section 35A. Okay, so this is the way, please make note of it. Section 45 is on suspension of management. Section 45Y is on preservation of record. Section 45Z, return of paid instrument, because you may get confusion. Section 45, it is, you may remember as nomination. Please make a note, section 45 ZA to ZF, that only deals with nomination. I think this is what in a brief about the Banking Regulation Act, and these are the few important sections of RBI Act. Issue of bank notes, note refund rules, and counterfeit currency note, a part of it, section 31 and section 42, one relating to CRR. Okay. CRR minimum, maximum, no minimum, no maximum. Penalty, definitely there is a penalty in case bank don't maintain the prescribed percentage. That is a on fortnightly basis 90% and on the last date 100%. Okay, if it is not maintained on 90% average and 100% on the last day, then there is a penalty, and the penalty is bank rate plus 3%, and the default continued, then bank rate plus 5%. This is the penalty. Okay, and one important question is that SDF. Yes, what is standing deposit facility? See, you know that section 17 of the Reserve Bank of India, that is the kind of deposits the RBI can take. RBI cannot accept the deposits which are attracting any interest payment by RBI. But under SDF, RBI pays the interest. And just in order to introduce SDF, section 17 was modified, and under SDF, when bank keeps money with RBI, RBI pays interest. And you can see in the policy rates, SDF gets the repo rate minus 0.25. That will be the SDF rate, isn't it? So now the balances kept with RBI under SDF, are they forms part of CRR? Okay, are they forms part of CRR? Okay, please make a note. No. Please make a note. No. Okay, they do not form part of CRR balances, but they form part of SLR balances. Okay, number two, incremental CRR. What is mean by incremental CRR? See, for example, what happened to 2016? There was a denominator, that is demonetization, and in the process of the demonetization, bank was flooded with a lot of flow of deposit. Bank deposit were growing enormously, and that time RBI was knowing this issue. RBI, what it did, all the incremental deposits during this particular period, okay, means a particular period, that is November to January, during that period CRR stipulations were regular CRR, whatever it is, incremental CRR 100% was there. Means all additional deposits during this particular period, bank was compulsorily to keep with RBI. That is incremental CRR. Is it clear? And then penalty, BR plus 3%, BR plus 5%, BR plus 3%, BR plus 5%. Corporate social responsibility fund allocation is as per Companies Law 2013. Whichever bank, whichever organization makes a profit of 100 crore and above, they are compulsorily to part 2% of their profit for corporate social responsibility, CSR, and as a part of CSR activity, that money will be used. NI Act we will definitely make use, but not now. And let me go for MCQs, because MCQs will be very interesting to you, and that too very, very latest MCQs, please. Shall I stop the presentation now? Hello. Yeah. I think 9:17, 13 minutes are there. I'm sure 13 minutes will be substantial time for dealing with a few MCQs. Let us see. Okay, let's see what best can be done. Now, yeah. Okay, so welcome to the MCQ session. Very, very important, very interesting also. And let us start the answer. In case of delay in releasing the original movable or immobile property documents, or failing to file a charge satisfaction form with relevant registry beyond the prescribed period after the full repayment and settlement of loan, the regulated entity shall compensate the borrower at the rate of. So first of all, there are three important elements. There are three important elements in the question. Number one is delay in releasing original document. delay in filing satisfaction charge. Okay, these two things are delayed for what period? So beyond 30 days. Beyond 30 days means 30 days are allowed. After 30 days also, if we don't do that, then every day penalty is 5,000, and these guidelines are applicable from yeah, I think landscape only. No, hello, screen is landscape, am I right? Yeah, good. Yeah, 31st December or 1st December. Okay, it is 1st December 2023. Now, next question. Pradhan Mantri Vishwakarma scheme initially implemented for a period of. It is not 500 per day, dear, 5,000 per day. Okay. PM Vishwakarma scheme will be initially implemented for a period of. Very good. Excellent. Thank you. Thank you. Okay. 5 years up to 2027-28. Scheme is launched with 13,000 crore outlay. And now stipend is available to the people who are taking up the higher level training of 120 hours. In that training only per day, 500 rupees as a incentive is given to the people. And there are two tranches. The 3 lakhs loan is given. First tranche 1 lakh rupee 18 months. Second tranche 2 lakhs rupees 30 months. Rate of interest is for first tranche 5%, second tranche 8%. This is how the entire scheme is drafted. Scheme is based on two important components. One is training, second one is interest subvention. Okay. And then in addition to this, there is a grant of 15,000 rupees given for buying a toolkit. These are the few features of Pradhan Mantri Vishwakarma scheme. I don't think beyond that we need to really spend time on that. Out of this only question will come. Clear? Clear? Shall I move further? Good. So rate of interest, subvention is 5% and 8%. Okay. Subvention. Clear? See, here it is there. 5% rate of interest. Interest subvention 8%. Interest subvention 8%. Okay. 5% per annum rate of interest applicable. Interest subvention 8%. Now, what is the answer for this question? Following incorrect regarding cyber attack. Which is incorrect? Yeah, correct. Whatever rate of interest you charge, ultimately customer will be charged only with 5%. Clear? So put together 8 plus 5, 13. Whatever way you understand. Customer will not be charged rate of interest more than 5%. Clear? Now, which of the following is incorrect regarding cyber attack? Hello? Quick. I'm not getting answers. Wow, very good. D. Okay, one answer is there. D. Yeah. Then another answer. Yeah. B, E. Yeah. I think, okay, good. Yeah. And whosoever has given E, they are perfect people. All are cyber attacks. Okay, therefore, none of them is incorrect. All are correct. Okay. Right. Payment and Settlement Act 2007. Which section deals with dishonorment of transfer of funds? Dishonorment of transfer of funds. Okay, some of you might have ticked section 138. Section 138 of Negotiable Instrument Act deals with negotiable instruments. Negotiable instruments has nothing to do with Payment and Settlement Act. Payment and Settlement Act all about the agencies which are involved in the transactions relating to cash, credit cards to your RTGS, NEFT, etc. From one place to another place, money gets transferred, remitted. Okay. And therefore, no question of 131, no question of 138, because Payment and Settlement Act do not have more than 35 sections. Okay. So as such, only section 25 deals with this, And as per this section, same punishment which is there in section 138, 2 years, okay, 2 years punishment or double the amount of that electronic fund transfer or both. Then what is Payment and Settlement Act? Payment and Settlement Act is, let us try learning something more about it. Payment and Settlement Act deals with all the participants who are there in the payment and settlement system of the country. Every participant need to be regulated, and for that purpose an act was devised, and that act is implemented in our country from 12th August 2008, extends to whole India. RBI is the authority to frame the rules, guidelines relating to implementation of the act. And RBI does it in two ways. One is there is a board. Second, there is a regulation. Board for regulation, supervision of payment and settlement system, and there are payment and settlement system regulations are framed. This BPSS is nothing but a committee of Central Board of Directors of RBI, Central Board of Directors of RBI. And RBI is the adjudicating authority for any disputes between any two parties which are participating in the payment and settlement dispute. Any two parties are indulged in any sort of dispute, RBI is adjudicating. If the RBI itself is a party, then central government is adjudicating authority. Okay, netting and the gross settlement aspect, I think I am sure all of you are knowing, so I don't need to spend time. This part you please make a note: centralized payment system and decentralized payment system. Centralized payment system includes RTGS, NEFT, and National Electronic Clearing Service, whereas decentralized payment system, MICR, CTS, ECS. Okay, and Payment Regulatory Board, RBI governor is a chairperson, deputy governor in charge is a PSS member, an officer RBI nominated by central government, and then 3 persons nominated by central government. Means RBI nominated people as well as 3 people nominated by central government, and put together the board, okay, Payment Regulatory Board. And this Payment Regulatory Board frames the rules and regulations for all payment system participants. Okay, yeah. Previous slide. Okay. Then, which authority is the CAPIO under which provisions? Quick. So, I wish that please tell me, because I don't carry the phone. My phone is not with me. Okay. So I wish please tell, because otherwise I'll continue and you people will get taxed, and I also get taxed, because again I need to get up in the morning for taking the session. Yeah. So answer is Central Assistant Public Information Officer, and the act is Right to Information Act. Please make a note, Right to Information Act is a very small act, not many provisions. There are only 5-6 aspects are there. Every time question comes from Right to Information Act. Okay, how much period is available for providing the information to the person who is seeking information, or is there any reason the person need to give why he requires that information? Okay, is there any fees applicable for the information sought? Okay, these are all the 3-4 important aspects are asked, and this Central Assistant Public Information Officer or Public Information Officer. RBI had recently migrated fraud reporting module under Central Payment Fraud Information Registry. Which is that? Yeah, definitely. Tomorrow. My idea is just to motivate you for reading at your way, so that my session goes in a very smooth way. Okay. CPFIR. So it is not the Samarth, it is a Daksh. Samarth, Janasamarth portal is altogether a different portal which deals with the loans to some select segment of government sponsored schemes. That those loans can be applied by the people under Janasamarth portal. Okay. Now, Daksh is a Reserve Bank advanced supervisory monitoring system, and for this, all banks, credit card issuing NBFCs, non-bank PPIs. PPIs means prepayment instrument issuing companies. Okay, they need to participate and they have to invariably lodge any fraud noticed by them, in their transactions. They have to report within 7 calendar days to the Daksh portal. Clear? The RBI also started a new portal for the purpose of 100 days, 100 pays, 100 pays, 100 days. What is that portal? Okay. And please don't mistake this Daksh with PM Daksh Yojana. PM Daksh Yojana is altogether different scheme. Okay, introduced by Social Justice and Empowerment Department, and this scheme is for providing skill inputs so that they can be self-employed, and this training is provided free of cost under Pradhan Mantri Kaushal Vikas Yojana. There is a stipend of 1,500 rupees per month for SC and Safai Karmachari and 100,000 rupees for OBC, EBC and domestic nomadic tribes candidates. And upskilling training program, as the trainees already are employed, they will be paid 2,500 per person per program. Like this, some features are there for PM Daksh Yojana, and the threads are being picked up from this only under the what you can say, your Vishwakarma scheme, where training is included. This is a recent change, and I'm sure you are going to give me the correct answer because I just told you 10-15 minutes ago. What is that? Answer for this is 10%. Okay. Then, yes, Ajay, any question? Ajay, कोई सवाल, कोई सवाल, कुछ बात करनी है? Yes, good. As per RBI guidelines, banks to disclose all items in the notes in the account in their balance sheet under Schedule 5. Other liabilities and provisions. If other liability and provision exceeds how much? And exceeds how much? Of total assets. So here is a bank balance sheet. This is the asset side. This is the total assets, and how much percentage it should be there, so that the details of that particular other liabilities compulsorily need to be disclosed as a disclosure. Yeah. So 1%, answer is 1%, and these are all the various disclosures. And let me tell you, whosoever is preparing for whatever scale, 1, 2, 3, 4, 5, they have to prepare 1, 2, 3, 4, 5, 6, 7, 8, and also the additional 6, 9, 10, 11, 12, 13, and other disclosures are almost 7, 8. So put together, if you read carefully, if you prepare on this, automatically you are good for writing exam. Asset quality, NPA classification. Exposure norms, that is yesterday our Murthy sir dealt, isn't it? This concentration of deposit and advances, components of deposit, components of advances part. Derivatives, compulsory, you have to be prepared for. Concept of securitization. Okay, these are all the areas, if you are good at, automatically you can write an exam well. DEF, DEF fund. Then complaints. Okay, complaints, then customer grievance redressal. Penalty by Reserve Bank of India on non disclosing the required information. Okay, these are all few things. I think with this, I'll give the forum for asking any questions. Okay, any questions? Can you provide link to your YouTube channel? Yeah, why not? But my YouTube channel is not so useful. My friend Vilas Arathi, definitely I'll be very happy to provide you. But please visit Institute of Banking Studies, and that link, what I'll do, that video link I'll post in our group. You can visit that, and then also visit the another video on KYC ML also. I think people have posted in some other group. I'll just try to repeat. Yeah. Yes, Aman, which answer you want repeat? Yeah, definitely, dear. I think morning you have seen the PPT. No, I have loaded, isn't it? Yesterday's part. Have I loaded? Okay. Now this also will be loaded, don't worry. Okay. And now I think 9:33, better we will close. Okay. Otherwise, no, we'll get delayed. Any question, any doubt, please ask. Okay. And yeah, your comments and your views on the session also most welcome. To be very frank, today I am extremely tired. Extremely means yeah, I can't explain the kind of tiredness which I have got. I think my participants, when I see more than 400, 500 like that, that is a energy giving, and I am in a position to talk to you. Okay. All the best to all of you. Good luck. Prepare well. And we are here to support you in your endeavor to prepare. Okay. Bye. Your comments are most welcome. Good night. Thank you, Yadav sir. Okay. आज के लिए
Thank
हम
you,
यहाँ
sir.
रोक देते हैं.
थैंक यू सो मच सर, इतना टायर्ड होके भी
Thank you,
आपने इतना एनर्जी के साथ ये क्लासेस लिया। और सेकेंडली बहुत सारे अपने स्टूडेंट्स का अपने ऑफिसर्स का ये क्वेश्चन था कि स्लाइड्स मिला कि नहीं मिला। सबको कल की स्लाइड्स दे दी गई हैं सबको,
सारे
और
ग्रुप
कल
में डालिए
के
ना.
हाँ, आज ने हमारे ऑल इंडिया यूनियन बैंक ऑफिसर फेडरेशन की तरफ से सबको सबके मोबाइल नंबर पे पर्सनल लेवल पे स्लाइड्स जा चुकी हैं कल के शाम की, और कल के शाम की रिकॉर्डिंग भी पूरी जा चुकी है सभी को सर। यदि किसी को नहीं मिली है तो बता सकता है। As of now, yesterday evening slides and video recording has been sent to all the participants, and in the morning hope that the morning slide video recording will also be sent to all the participants, sir. Thank you so much for so much energy, sir.
Thank you.
We are very thankful to you. I was
Yeah.
saying how much tired you are. You are taking the classes there for the OTP somewhere in the
Full day.
Hyderabad.
Hmm.
Full day. You
Full
both
day
faculties
for
are taking
1 to 2, 2 to 3, as well as 3 to 4, 4 to 5. Both the batches.
and
Three,
still you
three
are
batches.
giving your energy and time for all India Union Bank Officer Federation. So on behalf of AIUBF, I thank you, sir.
My
I
pleasure.
also thank my IBS and Satish sir and the technical team of IBS. They are providing such a fantastic platform that we are able to interact with each other.
So I think Mr. Shekhar Saket has not received. He has given number. I think this what you can do. No, so chat box. आप इसको copy करके रख ले.
He can WhatsApp me. I will provide if somebody is not given. My WhatsApp number is 8368923285.
Yeah.
So I can WhatsApp, or my All India has set up 100% full program. All those who have registered, they will be receiving, sir.
Okay.
No, not to doubt, they will be receiving.
Yeah.
Those not received can contact me. I will guide them. They will be also getting the.
Yeah. Result will be declared by 31st December. That is a true. That is the way. That is the way the things are going. Don't have any doubt on that. Bank is trying to declare the result by 31st December only. Okay.
So we will be meeting in the morning, sir, at 6:30 sharp.
Yeah.
And thank to all the officer participants who were here with us on our platform.
Hello.
Just a small question. Somebody was saying that everything like our written exam result and then interview and then the whole process will be over by 31st December this year. Any truth in this?
Yeah, absolutely truth. Why you had doubt? I did not get your.
No, generally 31st March only result is declared, sir.
Earlier it was the process. Now the new CMD, that is your new MCO, Manimekalai madam, she wants that this process should get completed by 31st December, so that all officers will be on track of work that required to be done in the last quarter. Last quarter, people should not be busy in preparing for exam and all and these kind of things. Let them be on the making bank to a greater heights. With that objective, by 31st December, everything will happen. Okay?
Even the transfers will be declared?
Transfers won't. Transfers, that's the reason everyone is telling you no transfers. Okay? Up to, okay. On account of promotion.
But result will be declared.
Yeah.
Okay, sir.
Okay.
Thank you, sir.
Yeah.
Yes, sir.
And
what is
sir.
the ratio for 2 to 3 sir promotion, sir?
Hello? Yes, Saurabh ji?
Sir, what is the ratio for 2 to 3 promotion, sir?
Ratio,
like how many seats and applied seated, sir?
Oh, those details. I think Yadav sir would be the better person to tell about that. Okay. Okay.
Pardon, sir. Pardon, I could not get you.
Number of people applied and number of
The exact figure I will have to ask, and I will come back tomorrow.
and they are ready with
2 to 3,
personal
it is 1 is
department.
to 8.
No.
It is 1 is to 8.
What
as
will be
per
the cutoff mark, sir?
That question is appreciable. I can tell you about that. See, please, I think people unnecessarily think about in a very different way about our promotion examinations. Scale 1 to 2, as such, I think a very thin competition is there. Very thin, means negligible competition is there. But scale 2 to 3, there is a slight competition, but not exorbitant like 1 is to 8, 1 is to 20, like that. No, okay? Don't be under that impression. Now, the severe competition is there in scale 3 to 4 and 4 to 5. Okay, not in 1 to 2 and 2 to 3. That's severe. That much I can tell you. Exact data, I think Yadav sir can get and share with you. That data is ready with personal department, and they won't have any hesitation in sharing that data. Okay, bye. Good night.